Hello and welcome to CommerceNet Scholars. I hope you all are perfectly fit and fine and you are being regular with the studies. In today's video, we'll be discussing about the marine insurance policy conditions or the clauses. Basically, when we are entering into a marine insurance contract, these conditions or clauses will be defining the extent or the scope of risk cover that is offered to the insured by the insurance company with which it is entering into the marine insurance contract. So what are those different conditions or clauses that we'll be discussing in today's video? But before starting, as you all know, a reminder for you all, watch the video till the end. Do give it a like if you really like the video. Share it with your friends as much as possible, and most important of all, subscribe the channel if you haven't subscribed yet. Let's proceed with today's topic, that is marine insurance policy conditions or clauses. As I told you right now, these conditions or clauses will be defining about the extent and scope of the cover offered by the policy that the insured is entering into. So basically, what are these clauses? What are these conditions? Let's understand them one by one. First is the assignment clause. The policy can be assigned to any person who may acquire insurable interest in the subject matter. Now, whenever a person is assigning the insurance policy, this assignment will be done as a transfer of the insurance policy, and this can be assigned to any person who can acquire the insurable interest in the subject matter that is insured against the policy. So basically, in assignment, whatever parties that are entering into a contract must have some insurable interest in the subject matter. Next is the lost or not lost clause. This clause was commonly used in olden days when the methods of communication were not so developed as today. To understand, let us take an example. X sent a consignment from Mumbai to New York. The consignment is on the high seas. The policy issued in this respect cover the loss of consignment, but as discussed earlier, a marine insurance policy is assigned freely. So whenever we are talking about a marine insurance, as I told you in the assignment clause, that it is assigned freely, just the only condition is that the party to whom we are assigning the contract must have some insurable interest after the assignment of the policy. So when we are talking about this example, say for example that Mr. X has sent a consignment from Mumbai to New York, but on the way the consignment is on the high seas. Now what will happen? Mr. Y, who has now acquired the interest in the policy, may submit the risk to the underwriter and effect the insurance. Now Mr. X has assigned the policy to Mr. Y, who is going to acquire the interest and now is going to approach the underwriter to effect the insurance. So basically, when we are talking about the lost or not lost policy, the object of this clause is to give retrospective effect for any loss which may have occurred during the period from the date of shipment to the date of issue of policy. Since this policy is basically focusing upon the lost or not lost aspect, so the date from which the policy the person is entering into the contract, from that date till the date of the issue of policy, if there is any mishappening and the policy is assigned before that, then in case the person to whom the final assignment is done can approach the insurance company for getting the compensation or claim. Next is Inch-Marie clause. This clause was framed following the decision in the Inch-Marie case in 1887 to protect the ship owner against the loss or damages directly caused by negligence of the master of the crew. So whenever the ship owner is facing any loss due to the negligence of the master or any of the crew members, for that the ship owner is protected against the clause of Inch-Marie clause. Next that we have is the at and from clause. That means the place from which the voyage will be starting and from will be the place where the voyage will be ending. So for the entire journey the ship will be protected, the goods will be protected. Next is the sue and labor clause. Sue and labor clause is a provisions of a marine policy which authorizes the insured to take all the steps necessary for the prevention or mitigation of the loss of the subject matter of insurance in case of accident or casualty. In case there is any accident or any casualty, the insured can take all necessary steps to get the effect of the insurance policy. Next that we have is the running down clause. This clause is also known as collision clause. The ordinary form of policy does not cover liability for collision damage, but the extra cover is granted by running down clause. Whenever we are talking about an ordinary marine insurance policy, this uh, benefit of the losses that are arising out of collision are not given under the ordinary policy, but this benefit is given under running down clause, wherein there is any damage caused to the ship due to collision. Next that we have is the touch and deviation clause. Now in case the ship is on the voyage and it had to deviate its route due to any contingent reasons, say for example there was a situation of high sea, there was a storm on the route, so the ship had to deviate its route. So generally when we are talking about a general insurance policy, if there is any deviation in the route, the insurance company can deny to pay you the compensation if you have faced any loss. This is what I have told you earlier. But under this particular clause, touch and deviation clause, if the ship has deviated the route due to some you can say due to as a precautionary measure, or working towards the mitigation of losses, in that case the insurance company will be paying the compensation. It's just that the people who are who had taken the insurance policy have to prove that yes, there was some contingency, there was some risk that was associated on that particular route, that is why the ship had to deviate the voyage. Next is reinsurance clause. As I have told you, whenever we are talking about reinsurance, we are talking about getting the insurance policy from some other person as well. So basically the reinsurance is liable only to original insurer, not the person to whom the assignment is done. Next is the touch and stay clause. This clause authorizes this clause this clause authorizes the ship to touch and stay at various ports wherever necessary for taking coal or unloading cargo or some other purpose. Now for example, the ship is on its route but it had to stop somewhere for the purpose of taking coal or for the purpose of loading or unloading of cargoes. This delay that will be caused in completion of the voyage, for that purpose the touch and stay clause is valid. If any mishappening occurs when the ship is at port for the purpose of getting the coal or for loading or unloading of cargoes, in that case if there is any loss that is happening, the insurance company will pay the claim under this particular clause. Next is name of the vessel, under which the name of the vessel is exactly mentioned in the policy. Next we have the name of the master. This policy is taken on the name of the master of the ship. Next is valuation clause. It is to be mentioned within the valued policy only where the value of the subject matter is agreed upon between the insured and the insurer and is written in the policy. That means at the time of taking the insurance policy itself, whatever value is mentioned in the policy, under that situation only the claim will be paid under valuation clause. And the next is the waiver clause. This clause supplements the sue and labor clause and declares that no act of insurer or insured in recovering, saving or preserving a subject matter of insurance shall be considered as a waiver or acceptance or abandonment. Both insured and insurer can take step to minimize a loss. In case there is any loss that can be mitigated, any loss that can be minimized, so both insured and the insurer can take that step to minimize or mitigate the loss. Next is the premium clause. This clause is also known as consideration clause. It contains an acknowledgement on the part of the underwriter of having received the premium, which is the source of formal binding of an insurance contract. Now premium clause means that the insurance company, that the insurer has already received the premium from the insured, and since since the date or time the insurance company has received the premium, the risk commences, and if there is any loss arising thereafter, the insurance company is going to pay the claim or compensation to the insured. Next is warehouse to warehouse clause or transit clause. Whenever the goods are being transported from one warehouse to another warehouse, the loading or unloading of the cargo, if there is any damage that is happening to the cargo, the goods, the insurance company is going to pay for it. say for example, when we are talking about the port of origin, obviously the goods are going to be taken out from the warehouse and then it is going to be transported to the port. So till the time the good is in transit from warehouse to the port, and if any damage occurs in that transit period, the insurance company will pay you the compensation under this warehouse to warehouse clause or transit clause. I hope it is clear to you all. Next is memorandum clause. The object of memorandum clause is to save the insurer from very small claims which may arise due to perishable nature of the cargo. Therefore, the purpose of this clause is to protect the insurer against very small losses. Some minute losses are there which arise due to the perishable nature of the product, such as fish, salt, fruit, corn, etc. So in that case, there is any loss that is arising, so the insurance company will compensate you in that regard as well. The next is the continuation clause. Now, talking about the continuation clause, this clause refers that the vessel shall continue to be covered after completion of voyage under the policy at a pro rata premium to her port of destination, provided previous notice was given. So, even if the goods have been unloaded at the port of destination, now when the ship is going to travel back to its port of origin, whatever if there is any loss that is arising within that particular route, the insurance company will pay you the compensation for that as well under the continuation clause. I hope whatever clauses, conditions we have discussed today are clear to you. Any doubts you can discuss with me. That's all for today. Thank you and have a nice day.